Title loans. Title loans. So, if you guys are not familiar with title loan, that's when you take your car in. You can do it online now too, I'm sure. And they give you a loan. They give you a loan on your car or title because of your car. But they put a lien on your title for your car. Not a good idea. Not a good idea at all. So it's a car that you own, and they give you a certain amount of money, and then they'll give you cash for that. So is it really, the question is it easy money or is it a financial trap? Let's talk about it here. We know the title loans are everywhere. You get fast approval, you get cash in minutes, and there's no credit check. Which is like one of the things that you have to really question. Like, man, I get this money this quickly without any type of credit check. Yeah, it's predatory. They are targeting specific people when they do stuff like that. People who don't have the money and or the economics, to go in to get a loan from a bank or anything like that. So they're really targeting people for that. So, but here's the real question. Just because title loans are easy to get, does that really mean they're smart to use? So it's easy to get them. It's just smart to use these, financial institutions. Today we're breaking down how title loans work and why they are so dangerous and what you should do instead. So what is a title loan? We'll touch on that for a second. A title loan is a short-term loan where you use your vehicle's title as collateral. You keep driving your car, but the lender holds your title. If you don't pay the loan back on time, they can legally repossess your vehicle. This makes it dangerous. I don't like the idea that, you get to, take my car from me, which further inhibits my ability to make money. So I don't know if this is a good idea here. So most title loans are $500 to $5,000. Very short terms, often 30 days. But they have extremely high interest rates. So the question is, why title loans are so easy to get? Title lenders don't care much about your credit. They don't care about your credit. Only thing they care about is one thing: the value of your car. So now you have a car that's paid off. You got the title to it and everything, and they get to take that car. They give you a loan or whatever, and then they can take your car if you don't pay the loan. And this is why the approval is fast. The lender isn't taking much risk here. You're the one that's taking the risk. If you default on the title loan, then guess what? The vehicle is taken from you, and they take it and they'll sell it. So what's the real cost of a title loan? This is really where things get ugly. Title loans often have APRs between 100 and 300%. 100 to 300%. So that means if you get a loan for $100, you can pay $200, $300, on top of your loan. So you just say you borrow $1,000. In 30 days, you may owe $1,250 or more. That's a lot. So your loan was $1,000, but then at the end of the month, now you owe $1,250. That's bananas. That's crazy. Now, most borrowers can't pay back that type of debt in 1 month. So what do? They roll it over. And when they do that, this is where they're adding more fees and interest. And many people end up paying 2 or 3 times the original loan amount, and still they lose their car. It's not a good thing. Don't do the title loans. Again, take something. If you got something that you already own, that you could do without, listen, a lot of people have like jewelry and stuff like that. Hey, if you got to take it to the pawn shop, do that instead. Just my advice. Again, I'm not the financial advisor, and I'm not your financial advisor either. But I'm just telling you what I would do. You know, I would not take that chance. You know, I wouldn't use my car as a collateral and use a title loan against it, because they're going to kill you with the interest rate. So why the loans are so dangerous? We already know. Here's what makes title loans worse than credit cards or personal loans. You lose your transportation. You can risk losing your transportation. And losing your car can mean what? Losing your job, missing medical appointments, being unable to care for your family, you know, amongst many other things. So once the car is gone, your financial situation usually gets much worse than before. It doesn't get better. It gets worse. So before you were just without money. Now you're without money and without a car. This is why so many consumers advocate, you know, that a title loan is a debt trap. It is a debt trap. So you have to consider, I understand that, you know, sometimes people want to, you know, consider a title loan. So when might a title loan be considered? To be honest, almost never. You know, the only scenario where it might make sense is a true emergency. I mean, what is that? This is when you are 100% certain you can repay it quickly. I mean, you have to know for sure, like this money's like, it's counted. I know it's going to be there. It's in the bank. For sure, I'll be able to pay this money back. But no other options exist. You know, so even this is still extremely risky. Just title loans is not a good idea. So we have to think about what are some of the smarter alternatives to a title loan. Now, before using a title loan, look into, you know, payment loans with creditors. You know, credit union, small dollar loans, borrowing from families, you know, with clear terms. You know, don't get into it with your family, you know, or your friends or whatever about this thing. Know for sure when you're gonna pay them back. Don't just say, "I got you." I need $100 or whatever. I'm gonna get you later. No. You know, put that down and say, "Hey, this is exactly what it's gonna be." Even if you have to draw off a contract or whatever, say, "Hey, you know what? I'll give you the money, but here's just sign this contract." You know, and then go from there. You know, anything but the title loan, please. The side income or selling unused items, you know, again, if you got some unused stuff, even some stuff that is used at your house, where you know that you can research and find out, hey, I can sell this and make money from it. Do that. At least you'll be without that, other than your car. You need your car to be able to get back and forth and do things. You know, there are local assistance programs or nonprofits that can actually help you too. But none of these will put your car at risk. So I think the bottom line is title loans are easy, but easy is not always smart. So, and we know that they offer, you know, short-term relief at a long-term cost. In most cases, they create bigger problems than what they can solve. So if this video helped you, you know, consider, you know, subscribing, liking, and commenting. You know, again, we're going to talk about all things finances, and, you know, again, we're going to learn this stuff together. You know, let us know, what would you do? Have you ever had a title loan? Would you suggest using a title loan? Put that in the comments, in the comment section. I see you again. The Financial Edge for me.